Traders expect a higher activity level this week on the back of maturities expected later. OluwasheAmeye, fixed income trader at CITI Nigeria, joins us now to review activities in the FMDQ OTC Securities Exchange. Thank you so much, Seun, for joining us this morning.
Thank you.
Before we get into some of the details of what to expect this week, I just want to get your thoughts on whether or not you would agree that there is a playbook that investors can default to in a season of heightened political risk. What's your view on how you approach the markets at this time?
Well, investors are of different categories. You have the local investors, offshore investors. You have those that are just playing for the short term and those that are playing for the long term. Depending on where you fit in this spectrum, that is what will determine
okay.
the kind of
let's assume you are the short-term oriented investor, local investor who is simply looking for yield. How do you approach this? Do you just default to the short end of the curve? How do you play this?
Well, typically, local investors just default to the short end, really. By short end, I mean T-bills, right, usually, and wait and see what happens, or close to any political event they are expecting, really. So local investors are typically of that nature. But if it was a local investor that is like a real money, like pension funds, yeah, they may see this as opportunity also to pick up something on the of long duration. So right, it's not so...
but is that because because of the heightened risk, we see an elevation of yields across the curve, and one anticipates that there will be a decline at some point after the electoral season, or
well,
your view?
That is partly that's partly the reason. Also, you know, the local pension funds have liabilities stretching into years, and they may think that we are approaching the all-time highs, really, of yields, and they will just likely just buy bonds. And also, if they forecast that there won't be any issues with the elections and stuff like that. So really,
what's your view on that? The outlook for yields going forward, say into January next year, compared to where they are now. I was reading that the budget minister was suggesting that Nigeria still has the capacity to borrow more, and that suggests that we would see more borrowing because many are pointing to the fact that revenues are under pressure. The budget simply cannot be funded by the up revenues that we're getting at the current level of production. So we need to, until we are able to find other sources of revenue, there will be that gap, and that deficit needs to be funded. So your perspective on that scenario?
I think it's best not to preempt. Let's see what they actually do, really. You know, they sent a request in the National Assembly to borrow offshore. You know, you don't know whether they may likely just concentrate more on that, really, rather than doing more local. They still have the plan of reducing the ratio of local to offshore borrowing. So really, we are getting to, you know, information stretching us in two directions. We don't know what they actually might do. So I think it's best to wait. But what is certain is that, I mean, they are likely to borrow. I mean,
so what does that mean for yields? Higher yields?
Well, like, the borrowing is not the only factor here. Really. Also, we have a lot of pension funds who are also willing to buy Nigerian securities. So on the balance, really, I think we just likely see yields trend up slightly, but I don't think we'll see a spike yeah.
Okay. All right. Let's see. Well, until we see how that plays out. Let's get your thoughts on the currency markets, where we're seeing more concerns around the outlook for the naira, even though we are seeing oil at above $80 a barrel. How do you see that trending over the next few months?
Well, I think, first of all, from the offshore perspective, I think the outflows are slowed down.
Okay.
So I get a sense that the outflows of offshore funds have slowed down, which itself is positive. And if oil continues to be at this level, $80 per barrel, I think we'll be fine. I don't see any crisis here at all.
Right. Okay. So if that is the case, I want to get your thoughts on whether or not we will see a little more harmonization of rates ahead of the elections. So we know that clearly there's the 305 rate, which is really for those who are importing petroleum products. And then, of course, there's the INE window where it's a much more market-driven, oriented pricing system there. How do you see things playing out in terms of a convergence of rates? We have seen convergence to some extent because all the other rates in between appear to be moving closer to 360.
Well, I think we are. Okay, I wanted to say that you left out the parallel market. I think
Right.
we are almost at the same level, the parallel market and the INE window, where majority of the transactions take place anyway. So I don't see any issues here really. We are just on the straight path, and I think that the rates will converge at some point. You know.
Okay.
Yeah.
So let's talk about this week in terms of activities in the T-bill market and the bond market. What should we be keeping our eyes on in terms of perhaps another OMO auction, or do you think it's a T-bill maturity? What do you think will set the tone for the market this week?
Well, let's start with CPI print. We expect that on Tuesday. We don't expect any major spike, though most analysts have forecasted an uptick in inflation, like even the central bank has forecasted an uptick.
But would you say all that has already been priced into?
Yeah, and that's
yields
been
that we're
priced,
seeing now?
yeah, unless we see a surprise,
Right.
yeah, from what the market expects. Then there's going to be a T-bill auction on Wednesday. I basically don't expect any surprise, you know. The
Well,
volatility,
how do you see liquidity levels this week playing out? So if we have the auction, usually we have maturities as their auctions. So do you think that will simply balance out, or do you see liquidity coming from somewhere this week?
well, I mean, the primary auction this week is a rollover, so that takes out the liquidity. But we have about 340 billion of OMO bills maturing on Thursday.
Wow.
So I mean, but you expect the central bank to issue OMO bills to take that out. So I think liquidity will remain somewhat a little bit somewhat
The
tight
cost
this
of
week.
those OMO auctions are really piling up. I'm sure if we look back, say 6 months ago, when maybe some of these OMO bills were issued, okay, maybe not 6 months, maybe 3 months ago, the rates obviously are not the same. The rates continue to move higher, and at some point, I guess the monetary authorities may have to look at other options. Or do you think that this is really the option left to the authorities right now to try and manage liquidity?
Well, they have to mop up. If you are in a tightening cycle, you have to make sacrifices. I think this is the easiest for them to do. And secondly, these rates have come down. Actually, OMO bills
Okay.
at 18 at one point
Right.
in the market, so the rates are down, you know, compared to what it used to be. I think they are mindful of the cost, but if they are left to defend the currency and to maintain a tightening stance, I think mopping up with OMO bills is will be the least expensive they can afford for now.
Well, I guess that is their job, so
Yeah.
they continue to do it. Thank you so much for joining us and sharing your perspective. OluwasheAmeye is a fixed income trader at CITI Nigeria.